Good afternoon. This is Serge with TradeJolt.com, and today is the 6th of April of the year of the Corona. And I want to show you first a little bit of my take on where the market is and where it's going, and then from there an opportunity that we have, a very attractive opportunity that we have playing the oil market. Okay, so this basically was a long-term prognosis I had made, and I want to show you where I think the market's headed. If you look here at the price, of course, making lower lows, well, actually up to here the price was making higher highs, and then from this point on, whereas price was making higher highs, we had the market making lower lows. Which suggested that we were going to get a downturn at least to the levels that we had here, and we got that. And then it suggested by the time it got that, which was about right here, the RSI suggested no, it has to go even lower. So basically that told me that the most likely direction of the markets would be to reach at least this third wave. You have the wave 1, you see it retrace, then you had a wave 2 going down. Actually, it's retraced a bit from there. It could stop here and head lower, but I believe it's going to head more to this level before finally heading lower down to here. There's a lot of support right here, which would be that 100% Elliott projection from the original one. And right down here at a level of about 195, I believe that is. Let's go now to our daily charts to go into more detail, make sure we have confirmation. And here you can see a little bit more fine-grained detail. Here you see the first wave coming down, bouncing up. Then we have a second wave we would have expected to come down to at least 267. Came pretty close to that, and then from right here, and then bounced up. And then it started down. That was a 50% retracement. We expected to reach this level. It did right here, and then it bounced up back up from 38% to 50% and started back down. A lot of people think it's over and that we're now headed towards a V-shaped recovery and everything's going to be fine and good, and unfortunately I think that's not the case. But I do think we're going to get, instead of a retracement to this level, I think we're going to see about a 68% retracement of the amount that it's moved down to date. Why? If you look here, you see a wave going here to here, and if you were to, you can double check that by measuring the distance from here to here, and you see that it went in 1, 2, and 3 waves, then retraced down about 30%. The fact that today it just popped up and made a higher high is the confirmation we are looking for to it reaching this next level. Why that level? Because if one wave is made, there's about like that, and it gets broken, the peak gets broken, there's about a 70 to 80% chance that it's going to make a symmetrical move in the same direction. And that's what we're expecting. We have a lot of resistance here, overhead resistance at this price level, and which is very close to where that second level projects. That would be my take for where this thing maxes out, right around here, this 297, 298 level. So that would be for the SPY, proxy for the S&P 500. So that, for those of you who have lost money so far and weren't prepared for this downturn, didn't take up my suggestion of buying portfolio insurance in the form of options, that will give you a chance to get back a lot of your losses. At that point, it will only be down about 10% off the highs. That would be a good time to take your marbles off the table, accept your lumps, and be happy over the fact that you made so much money over the last 8 years on this Fed induced mania is what I would call it. In any case, we are going to put a temporary play based on betting that the SPY will make it up back up to these 297.50s, and then we'll start playing it to the downside again. Let me show you today's trade. I just wanted to give you the larger context. And today's trade is on the oil industry. The oil stocks have gotten absolutely hammered based on the worldwide quarantine of people, which of course stopped really all traffic, air traffic, truck traffic, car traffic in its tracks. And demand just evaporated for oil. And of course, the supply demand of oil being very inelastic, you saw a very, very large drop in oil prices from the $40 level all the way down to the $10 level and lower. This is USO. It's not the actual price of oil. It's the price of the oil fund, but it reflects and moves with the price of oil. So some people may think that the oil problems are over with and it's a great time to buy oil stocks. It's not a bad time to buy oil stocks, but we may see yet more damage to the downside if this RSI is any indicator. If you look here and trace the highs of the RSI here on both a 30 and a 50-day period, and you look at stock highs, they're also going down. They're both convergently bearish. They're headed in the same directions. Now, if we trace the lows, here we have lower lows, and here we have a flattening. That suggests that we're going to see a temporary retracement to the upside. And if we then measure the recent downtrend from peak to trough, we can see we had already a significant uptick, but it hasn't yet reached the 38% level, and it hasn't reached the former pivot point that we see here right around $7.80. So that is what I believe is going to happen over the next 2 weeks, and then most likely we're going to have another leg down, unfortunately, because that's going to cause a lot of bankruptcies in the United States in the oil sector, and with that, a lot of unemployment and a lot of misery. Consumers will like it at the pump, but overall, I think the effects will be more negative than positive on the U.S. economy. But be that as it may, that is what the charts show. Let me switch now to today's trade. I'm going to switch to daily candles and move this over here to the right. And as you see, let me get my annotation tools. If I trace again the recent low to high, you can see that it hasn't yet reached the 38% level. So we need at least a correction up to $7 to be quote unquote satisfied as far as Elliott wave performance. And that doesn't have to happen. It just generally happens. So let's look at things. We have kind of a wave here in formation, but it hasn't yet completed. Well, actually, for me, this is enough. It hit the 38% level. So this here, let me show it to you with a parabola tool. For me, that constitutes a wave. So it hasn't yet breached that wave. But I think it will. Now, it may first go down more. It may retrace down 68%. That wouldn't surprise me in the least. But I am going to go ahead and place a bet to the upside anyway, simply because the bet is so compelling. Let me show you. If it makes a higher high, and my RSI here has been flattening as this has been making lower lows. In other words, I have, on using daily candles based on a 30-period RSI, I have a definitive flattening. When I trace from here to here, that suggests the price is going to move in this area. And when I compare that even with a longer period, a 50-period RSI, I get the same flattening here. And when I trace up from this high, it reached this high, and I go, last time it was at this high, it was right around here. That told me that was a price, you see, right here of 864, the low here, see? That would be exactly, or almost exactly, let me see how exact that is. If it makes a higher high, well, if it makes a higher high, a mirroring of that higher high would only have to take it to the 728 level. And I believe, I can't see it on this chart, that's where there's resistance. But it may make it as high as this level here. That would be the third Elliott one wave, two waves. The third Elliott wave would call for an expansion to this level. Doesn't have to reach that level. But that would be in conformity with the RSI. I'm making a play that's going to make money. I'll show it to you. We figure it's going to reach at least 710, and we think it's going to take, this took about 2 weeks, so it'll probably take about 2 weeks to get there. So here's the play. Look at how compelling this is. It was so compelling, I took a lot of positions for a lot of my clients, including myself. It cost us an average of 4 cents to put on this position. And that's per contract, which is $4 when you multiply out by 100 shares in a contract. So $4 per contract times 260 contracts. And this is an average, not exactly 4 cents. So it cost us, I believe, oh no, here's our value at risk, $1,009. Let me see if that's correct. It tells me 624 is at risk. We spent $871, so $871 is what we can risk. We have sold a call that expires on the 17th of April at a price of $9, so we're obliged to sell it to somebody at $9 if it moves higher. If it moves lower, nobody's going to want to buy it off us at $9. They can buy it off the market lower. But we have the right, excuse me, no, that's correct. We have the right to buy it off somebody at $8.50, and we have that right for 1 week longer than our obligation to sell. So this price covers this price, and we cannot lose more money than what we put up. So consequently, if the price never moves up, it stays in the range it is in today of $5.50, somewhere in this range. Supposedly there's a 5% probability of it moving as high as this and a 5% probability of moving as low as this. I don't put any credence in these. That's based on the last year's average price movements. However, this is an unusual period, and the price movements are going to be far more. The volatility is far higher than what we've had over the last year. So my analysis, my Elliott wave analysis that you just saw, told me that this is going to move in minimum in the $7 range and possibly as high as $9. So and probably over the next 2-week period. That's why I optimized this particular trade around those two levels. If it goes to the lower level, we will make, with $871 at risk, we will make somewhere around we'll make about $5,000. That's about a 6-to-1 return. And if it actually does move as high as $9, which it could within that period, well, that would be phenomenal. That would be about a 25-to-1 return. Those things happen now and then. We've had a couple of home run winners like that in this 3-month period. I think the best I've had was 15-to-1. But this could well happen. If it doesn't, for some of my small clients, I think I bought 10 of these shares. Let me show you. So they've got $34 at risk, and that's what happens if I'm wrong. And if I'm right, they're going to make about $200, and they may make as much as $900. So that's it. That's the trade. Please realize that these trades are complicated. You can make mistakes getting in. You can make mistakes getting out. And you could lose money. So don't do it unless you understand what you're doing. Make sure you read our disclaimer, and that's it. I wish you happy trading. Thanks for listening.